In this recording, we're going to discuss reverse divergence. Reverse divergence is also referred to as hidden negative divergence or positive divergence or hidden bearish divergence, hidden bullish divergence. And the ultimate divergence indicator has a field that is designed to go ahead and plot reverse divergence automatically. It's beautiful. But we have to understand what it is, first of all. And we have a perfect example of this that took place on the 23rd of February, right after we hit the all-time high of the ES. And that occurred right here. Now we had an all-time high here and a lower high here. Failed to make it to the top, so that in and of itself is a good time to short. But it was also a perfect indication of reverse divergence. Now, what is it? If we get a new high here and a lower high here on the indicator, and by the way, these are the RSX Dyna here in subgraph 2 and the CCX in subgraph 3. A lower high and a higher high is regular divergence, but a lower, let me say that again. We have a higher high on the price, a lower high on the indicator, that's regular divergence. But if we have a lower high here, but a higher high on the indicator, that's reverse divergence, reverse bearish divergence, reverse negative divergence, or hidden divergence. It goes by many names. It's the same thing. That's what's called reverse divergence in Joe's indicator. And we've got a perfect example of it right here. On the RSX, higher high, lower high here. Higher high on the CCX, lower high here. Perfect example of divergence. Beautiful. Now let's identify exactly what's happening here with regard to the indicators. Now, if you go into the indicator itself to make sure that this will plot, you got to have your formula in here, which we do. This setting is set to 10 and 3. 10 is the length, 3 is the Dyna setting. And you can see that in these two fields right here, 30 and 1. Same on the bullish side, 30 and 1. Then you have to go down here, and you must set the reverse divergence field to true. And if you're going to be using thresholds, which is a good idea, true for the bullish as well as the bearish. Okay. Now we've just selected 60 as the threshold, 60 and negative 60. So whenever the indicator moves above the threshold of 60 or negative 60, all right, that's the cyan colored horizontal line here, or the red down here, we've met our condition. We've breached. So for that reason, that pivot point right there will show up only once you have divergence. It won't show up at the time that it first occurs. It shows up in hindsight. But it at least identifies where it took place. But you knew that because you could see that it breached. So once we got to a lower high here, but a higher high here, and we pivoted and we hooked, we got the signal. 1 bar later. Beautiful. Now we've got another pivot point here, but this corresponds to this pivot here. So again, once we breached, all right, that pivot point was found, but the divergence takes place over here because here we are pivoting above the threshold and coming down. Lower high here, higher high here. On the next pivot, which turns out to be higher in this case, okay, that's corresponding to this breach here and this pivot here. Higher high on the indicator, but a lower high on the ES. Now, that pivot point that corresponds right before that signal is in reference to this pivot point here. Okay? Higher high on the indicator, lower high on the ES. Right? Now, we've got this signal here. Let's identify where that pivot is. Let's go back and just, this is the CCX set to 25 and 6. And it looks like I've got to expand the pivot here because I can't seem to find it. Let's get that real big. Oh, there it is. Okay. All right. So let's look at the CCX. All right. CCX breached the threshold that we had set up for 100. There it is here. Lower high here. Higher high on the CCX. That's why you've got that. Right? Now, let's take a look at these instances as well. This is again the CCX, and I'm just going to need to expand that threshold or the pivot point because it's probably layered on top. Ooh, still not big enough. Let's go a little higher. Oh, wow. Okay, we're way back here. That doesn't quite seem right, but that's where it found it. Okay. All right. So anyway, as you can see, we're at a higher low compared to way over here. Okay, let's review that again. This is your pivot. Here's the higher low. Here's the lower low on the indicator. This is really tough to see, but it's measuring the breach of the threshold, but it's looking at the pivot of the indicator at the time of the higher low here. So technically it's meeting the conditions. And then you've got, so this is a lower low in fact. This is even a lower low, but at the same time it is still lower than the pivot. Okay, so this is the pivot, this is the lower low, this is the higher low on the ES. We're not comparing this to this, we're comparing, let me do that again slowly. We're not comparing this to this. We're comparing this to that. Okay, so don't be confused. So that's another case of reverse divergence, and that's on the CCX. Now on the RSX, remember we have the threshold set to 60, or negative 60 for bullish divergence. So that takes place over here. We breached the lower threshold at negative 60. We're at a higher low, and in fact, it looks pretty much like an equal low there, but a lower low on the indicators, and that's why we have a signal at that time. Then we breach it again over here. That's why we have the cyan colored dot on the ES. We're breaching the lower threshold. And then the signal shows up at a higher low here, but a lower low on the RSX. That's why we have the signal. Now, what we want to do when we're in fact trading this, we want to look for and verify what the trend is. And so once we hit that high, you're really not going to be looking to go long because you've already got a very clear indication of the trend here. We made a significant drop after failing to make a new high. So that's very clearly short. So you're looking for opportunities to go short, not to go long. Over here, whereas we're still moving up, you would have been looking for an opportunity to get into the long. That really didn't happen until over here. Okay, because none of the indicators was really dropping below the threshold, other than right here, but that would have been the pivot. But you didn't get another signal, so failed to display. So you can use reverse divergence with any indicator, but we've got it set up now for using it on the CCX and on the RSX. One isn't necessarily better than the other. Now, there's another thing I want to show you that you should do with regard to the ultimate divergence indicator. Because there are so many different settings and so many different formulas that you can plug into this thing, it's good to establish a study. I'm going to show you how to set up a study so that the indicator can be easily inserted into the workspace without having to reinsert the formula. So watch carefully. What you want to do is create a workspace and insert into that indicator, or into that test workspace, one of the ultimate divergence indicators, and set this thing up the way you want to. Input the formula into these two fields. Set it up the way you want to. Now here's what we've done. We're using reverse divergence here, so I've set a title on this so I can refer to it later. This is reverse divergence using the CCX with a setting of 25 and 6, as well as the threshold. All right. I've inserted the formula. I've set up my settings, reverse divergence, and my thresholds, 100 and negative 100. Now, once I've done that, what I'm going to do is I'm going to save this study. Okay? And I'm going to name it so that once I've named it, I've now created a special setting for that indicator that I don't need to go and recreate, but I can simply insert it into a workspace by just going into the Add Study group. So what I would do, wherever I want to put it, I'm going to go in here and Add Study Group, come down to the name, okay, so I've named it Reverse Divergence using the CCX and threshold. Hit OK, and it automatically adds that into the study. So now, as you can see, I have two of them because one was already in here. Therefore, it's like what you would normally do is go to Add Study here, but the ultimate divergence indicator is only got one setting for that particular indicator. And then you have to, if you add it that way, now you have to change the settings. So instead of doing that, we create a study group. So you can have as many different iterations of that particular indicator in the study group that you can go back and then add to a workspace without having to add the study itself, then change the settings. I hope I'm making myself clear. Okay. All right. So do that. All right. So now you've got an understanding of what reverse divergence is. It's a great resource. It happens all the time, and it can be very effective for trading. So let's just look for one more example of this. Again, these big round dots are pivots. They're not divergence, they're pivots.